This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 29th, 2020. Our question this week is, how is Jeff Bezos worth $200 billion? The answer will be provided later in the video. The market does one of three things every day. It goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways: economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was up. It was a record-setting week. The Dow Jones Industrial Average increased 0.57% on Friday, and it was up 2.59% for the week, wiping out all losses from the pandemic sell-off. The S&P 500 increased 0.67% on Friday, hitting an all-time high, and was up 3.26% for the week. The Nasdaq increased 0.60% on Friday and increased 3.39% for the week. Looking at the week, we can see that the Dow Jones Industrial Average and the Nasdaq suffered only one down day. The S&P 500 was up every day during the week. It closed out the week at an all-time high. On Thursday, the new unemployment claims were just over 1 million, which met expectations. The Federal Reserve announced that they would target an average range of inflation. Several companies, including airlines, announced that they would lay off thousands of workers. American Airlines announced that they will cut 19,000 jobs, even though Salesforce stock hit highs this week. They announced that they would cut 1,000 workers. And MGM Resorts reported that they are going to lay off 18,000 employees. Congress still hasn't come up with a new stimulus deal to help people who lost their jobs due to the pandemic. The Republicans held their national convention, and it was reported that Jeff Bezos has wealth of more than $200 billion. New unemployment claims, Federal Reserve announcements, new job cuts, congressional actions and inactions, pandemic developments, and the markets hitting new record highs are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and they go down, but with an upward drift. The market will continue to go up because the powers that be want the market to go up. One of those powers that be is Congress, more specifically, the politicians in Congress. Often politicians are privy to information about laws and corporations that the general public does not know. They often use their privileged information to buy and or sell stock. This now is illegal, but the practice still persists. And after they leave office, they end up on boards of corporations, where they often receive thousands of shares of company stock. Last week, we learned that former Vice President Al Gore is a director for Apple, and he owns over $57 million of Apple stock. Which brings us to our question of the week. How is it that Jeff Bezos is worth more than $200 billion? Jeff Bezos is a founder and CEO of Amazon. He owns about 55.5 million shares of Amazon stock. If you multiply that by Wednesday's record close share price of $3,441.85, means that Jeff Bezos is worth at least $191 billion of Amazon. I will assume that he has other assets, either real estate and or more stocks in excess of 10 billion that makes him worth at least $200 billion. Most extremely wealthy people derive most of their wealth from stocks. Do you own any stocks? Do you own Amazon? Or do you just buy from Amazon? At over $3,400 a share, is Amazon stock price too high? Maybe it is. Is the price going to pull back soon? Is it going to fall? Maybe. I don't know which way Amazon stock or the market is going to go, and I don't care. I trade the market as it is, not as it should be. I simply take advantage of what the market is. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending August 29th, 2020. Notice that Amazon is not on this list. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Roku. It's in the second column. It increased 17.48% for the week. Roku is a streaming device company. Even though it is the leader in over-the-top streaming devices, its stock growth has trailed other streaming device makers like Apple and Amazon. The stock seems to be making a move now. I did not have a trade on it this past week, but I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it by using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF, SPY? Let me know in the comments section. Are you willing to share your strategy? As of August 29th, 2020, my portfolio is outperforming the S&P 500 index ETF, SPY. Year to date, my portfolio is up 18.47% versus 15.20% for SPY, a difference of 3.27%. I am beating SPY by 3.27%. This week, equities, including puts, calls, and ETFs, make up 51.57% of the portfolio. Cash is 48.43%. The cash flow generated for the week was 2.88% of the portfolio account value. The account value increased by 3%. Meanwhile, the S&P 500 ETF SPY increased by 3.27% this week. I sold option contracts on 9 positions this week, 8 calls and 1 put that ranged from $226 to $758.64. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of FinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street, by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.